Hello, and welcome to another video. Now, my question for you starting this video off is, do you have money in a basic checking or savings account at a local bank, credit union, a big bank, one of the big banks, and it just feels like it doesn't grow? It's growing at the pace of a snail movement, right? Snail doesn't go fast. Let's just put it that way. And people get frustrated about this, and I don't blame them. That is very frustrating. And we're going to discuss an option that a lot of people have not heard of. I'm kind of surprised still that it's not been heard of by a lot of people, but it's called a high yield savings account. And let's see if it's right for you, shall we? Now, if you are new to the channel, welcome. I am Lisa. I've been a financial advisor for 13 years. And I help people get to financial independence as quickly as possible. I work a lot with women, and we get into the nitty-gritty of detail because as women, we did not get a lot of education when it came to finance. I didn't, at least when I was growing up. And we don't like moving forward with things unless we understand it, or at least we can trust that process. And it's hard to trust if you don't understand anything, right? So I wouldn't say that we just do education here. I hope that this is relatable and that it's kind of fun. I'm trying to make finance fun. That's one of my big goals, is to try to make finance accessible and fun. Because I don't believe in waiting until you're 65 to enjoy your life because you were retired. I believe in using your money so that you can have the life you want now and continue to do that in a way that's not stressful. And, we get into this thing where we're working and we're stressed out and money just seems to be flying out the door and we're not quite sure what's happening. And that's not a way to live. You need to have some control over your finances, and it can be a lot more fun because you can experience a lot more stuff. So if that sounds good to you, then stick around because the high yield savings account might or might not be for you. And you'll find out now. Now, a high yield savings account is interesting. It's amazing how many people I talk to, prospects or clients or anything, that don't know about high yield savings accounts. And I feel like they've been around forever. I'm sure they have. But in my life, they were around way before I even started in the industry. I met my husband a long time ago, like 16 years ago, and we've been married for almost 15, I think. Oh my gosh, time flies. And I remember when we were dating, he was telling me about the ING Orange account that he used. Now, don't go look that up. This is not a recommendation for that product because it's not around anymore. It's closed. ING is not around anymore. But this was my introduction to it. So by the time I got into the industry and started talking to people about their personal finance, I knew a lot about high yield savings accounts. And it's funny because there's just so much information out there, and yet it doesn't get utilized because I think people don't know to look for it, or honestly, they're fearful of it. They don't understand it. It seems too good to be true, quote, quote. So there's a lot of pushback on it. I almost call it, it's kind of funny. I was talking to a client, I've been telling them forever about high yield savings accounts. And he said, I guess I'm just kind of lazy when it comes to that because, you can't set it up for me. And that's the truth. You can't come to me and say, that sounded great, Lisa, open up a high yield savings account for me. That's not, I can't do it. I'm not associated with any of them. I don't represent any banks to do that. But it is worth taking some time. I call this self-care time, to look into high yield savings accounts and see if they're right for you. You could be missing out on a lot of growth that you didn't realize. So that is my little plug of high yield savings accounts and my history with them. Now, a lot of people are going to sit here and go, well, what is a high yield savings account? I get it. High yield means I'm getting a higher interest rate on a savings account. I understand that concept, but what really is it? Now, CNBC had a nice quote about it. They said, high yield savings accounts reward you with a higher interest rate than traditional savings accounts, making your money grow faster as it sits in your account. The interest rate that are on these accounts are known as annual percentage yield, or APY. We're going to go into APY and how it's a little different than interest rates. And if you compare it to traditional savings, they're both savings accounts. They're both checking or savings, or name those things. and they both get an interest rate. And it's funny because we went and had to change banks recently, which, as all of you know, is a big pain in the butt to do. I don't know why they have to make this so difficult. I guess that's why they do it, because they want to make it difficult so you don't leave, right? But we left a big bank and we went to another big bank, and we were sitting there signing up on stuff, and she was showing me the rate sheets of CDs and interest rates, and I just looked at her and I said, why are the banks not giving higher interest rates on accounts anymore? I mean, the interest rates are through the roof right now on mortgages and on other things. Like, why can't you guys give a higher rate than 0.2% on my checking account annually? And she said, she shook her head and she goes, I have no idea. I have no idea why we don't do that, but we don't. And that's the reality of things. I think people just kind of put up with the lower rates of return on their savings and their checking accounts because, you know, we were in a low interest rate environment at that point. So we just thought, oh, well, that's where you got to go. But that's not true anymore. And it hasn't been true for, 2 years now? Something like that. Might be a little less than that. But we've had these other options for a while, and they might not be here this whole time. And I'll explain to you what I mean by that. So really looking at these high yield savings account is worth your time and effort. I tell you, it is. So basically the difference between an APY and interest rate is very slight, but there is a difference. So APY reflects the total amount of interest you earn on your money over the year. Okay, so that means it builds on itself. So if you have $100 and it grows to $110, the APY grows with it, right? Whereas interest rates typically are on the original amount, the interest that you get on the original amount. It's not always that way, but that's typically how it's kind of seen. And that was by NerdWallet, who, by the way, has a fantastic monthly piece that comes out. I will put it in the description below. That every month they update the rates and everything on high yield savings account. It makes it so easy to find the right one for you. I will explain to you what you should be looking for and all that. But I do suggest looking at those, not just, just to find the one that you choose, but every once in a while, maybe once a year, look at the rates and make sure that your high yield savings account, if you choose to use one, is competitive, right? We don't want to just sit there and not be competitive. If you're getting, 2% and they're giving 5% everywhere else, you need to know that. And it's important. So anyhow, that's my little 2 cents on that. Okay. So why should you consider a high yield savings account? Basically, there's some pros and cons with everything. And here's some of the pros, right? It does get a better interest rate. It does. It tends to get about 10 times what the banks are getting, maybe more. That is just an observation. That is not a fact. I can't say for sure it's 10 times, but that has typically been what I have seen, 10 times or more than what the traditional savings account or checking account is getting. So, if you've got $1,000 in there, why not make 4.5%? Or they're not really at 4.5 right now. I would say they're probably at like 4 to 4.25 right now in July of 2024. That's the year we're in, July of 2024. Instead of getting 0.2% on $1,000, right? It just makes sense. It just makes sense to look into something like that. It is financial stability. So a lot of people in this, it's too good to be true, which is a lot of what I get from this discussion with people, is that, it is low risk. It's a savings account. It's a checking account. It has FDIC insurance up to $250 per person. You've got to look at those rules that's regarding a trust and other things, but $250,000 is a good number to remember. If you have more than $250,000 in cash, might want to talk to a professional, make sure you don't have too much cash or what you're, depending on what you're saving for, right? There's no market fluctuations. So it's not like putting in the stock market and having to worry about the market going down when you need your money. You don't want that. And essentially there is safety and security on this because of the FDIC. These are banks traditionally that have this. So there is some security on that, you know, given the fact that some banks have had some issues and stuff that might not seem true to you. But in general, the banking system tends to be safer than some other investments that are out there. They have a return of principal for sure, you know, as long as it's under 250 and FDIC insured. You do want to make sure, NerdWallet I don't think ever lists anything that is not FDIC insured, but as you're doing research, make sure that you are choosing one that does have the FDIC insured or have some kind of insurance for you for your money. That's important. And there's easy access. So if you are one who likes to do banking on your phone, who likes to be able to log in on the computer really easily and that kind of thing, all of these are very easy to do that. They have fantastic apps. They have a really good setup. Some are better than others. I've heard some people say, oh, I don't like this one, but I like this one better, that kind of thing. But you just have to find the one that's right for you. But they do have a lot of accessibility online or on your mobile app and things like that. And the nice thing is too, in terms of accessibility, not just being able to look at it anytime. The other thing is that they're different than CDs. Now, some of them do offer CDs internally, so you could take advantage of that if you wanted to. But they're different than CDs because they're liquid. So if you have $5,000 in there and you need $1,000, yes, you're not going to get your APY on that $1,000 that you take out, but it's accessible. There's no hold on it. You don't lose interest. You get interest. You get your APY, I should say, on the money up until the day that you take it out. So that's kind of nice to have that ability. Now, of course, there are cons. Cons are their fluctuating rates. So let's say you get into a high yield savings account today and it's at 4.35. Okay, that's a great rate on cash. It's above inflation now. It's doing well. It's keeping up with inflation for sure. But I would say it's above inflation now. So let's say you get 4.35 and rates change, you know, Fed lowers the rates, whatever, it can go down. It can go down to 2%. I've saw them down to 0.4%, you know, when we were in the lowest interest rate possible, it was 0.4%. Now, what were the banks giving? 0.01%. So it's still a lot better. I'll take 0.4% all day long over 0.01%. But, you know, they change. I mean, that's a huge percent. I mean, that's a 4% difference almost from 4.35 to 0.4. And I remember clients, you know, I'd have some clients and they're like, should I really do this? I mean, for 0.4, I'm like, yes. And they're very happy now because it went up, right? And of course, when it goes down again, they're going to be unhappy again. But it is what it is. It's just fluctuating rates. That's part of it, you know, at least your principal is intact, right? That's the most important part, and you're getting some kind of growth that's better than the traditional banks in general. There is a limited growth compared to a higher risk investment like putting in the stock market. You know, do I think you're going to get 12% on your high yield savings account ever? Probably not. I would find that to be very hard to believe that would happen. Could you get 12% in the stock market? Yeah, you could. You know, if you did the S&P 500 and had a fantastic year, or you just got the average of one of the indexes, some of them do average about 12% a year. So you could do a lot better. But there's risk involved with that, where there shouldn't be as much risk when it comes to your high yield savings account, right? Okay. They can have fees depending on balances. Now, one of the nice things about most high yield savings accounts is they don't have an account balance minimum. They used to. I'm seeing them kind of go away, which is nice. So you can start with $1,000, $100, something like that, right? But there sometimes are higher fees when you have a lower amount that goes into them. There's sometimes fees, you know, higher fees in one than the other. So you do need to be aware of what the fees are before you just kind of blindly join something, because it is, when you do look at like things like the NerdWallet article that they put out every month, it's very intoxicating. Just go, okay, that's the highest one, I'll go with that one. But I'm going to tell you how to choose the right one for you, and that's not the way to do it. Okay, don't do that. Do some research on it. This is your money. Okay, there's time that it takes to transfer money in and out. Now, I'm finding that that's true with the regular banks too, to be honest. But there is time. Sometimes there's a 3-day lag or something like that. So you do have to think ahead. You can't be like, I need my $1,000 tomorrow, and it's going to be in your regular bank account. You would link it to a regular bank account so you can access it, because we'll go through this in a second, but they don't typically have like ATMs you can go and pull money from. So you do have to think ahead a little bit when you need to get your money out of those. And they really don't have brick and mortars. I don't know of any of them that have brick and mortar places that you can walk in and do your banking. If that's really important to you, then maybe this isn't for you. They do connect to regular banks, so you could, transfer money back over and then go to the ATM if you needed to, but I know that that's a longer process for people. I never tell anybody to take all their money and put it in the high yield savings account. I do think you need to keep some cash at the bank. Now, a lot of people get addicted to the fact that you get a higher APY at the high yield savings accounts, and so they want to put everything there. I do think you need to have some cash available for those emergencies that you can't think ahead on. How much depends on you and your circumstances, though. Okay, so how do you choose the right one? So let's say you go to NerdWallet and you choose, and you go through the list, and how do you figure out which one to do? They all look good. They all look like maybe they have the same rate. How do you choose? You're going to look at the interest rates, of course, right? You're going to look at the rate of return, I should say APY, of course. You're going to look at what their return is right now and all that kind of stuff. You're going to look at FDIC insured or some kind of insurance on there that's going to make sure that everything is legit and that you're going to get your money back. There's no bankruptcy issue that could happen. You're going to look at fees and minimum balances. So if you know that you only want to put $10,000 in there, I don't know which one wouldn't have that as a minimum, but let's say you only had 10,000 and this one has to have 20,000. Don't do that one, right? It's logical. But there could be fees. There could be, like, if you put in $1,000 versus $10,000, there's a fee associated with it. I haven't seen this a lot, but it's worth looking at because you don't want to be blindsided on some fees. And fees are always tricky with stuff. People don't even see the fees happening, and that's not good. You want to know what the fees are. Accessibility. So you want to look at their platforms and see, do you like it? If you're signing up for it and it's driving you crazy, don't use that platform. Because once you have an account and everything else, it's not a different platform. They're going to use the same technology that they use for you signing it up. It might even be better, the technology of you signing up versus what you're going to see. So if it's driving you crazy opening the account, just get rid of it. Just don't use that one, because that's going to drive you crazy all the way through. Heard that a lot, and that's my biggest thing, is it's supposed to be easy to access everything online because there's no banks to walk into. There's no place I can go and yell at the guy behind the counter. I don't yell at people behind the counter, but you know what I'm saying. So make sure they have good customer service. So if you're calling with questions, make sure you like the way they talk to you. Make sure that you're comfortable with them. These are people, these people that you're talking to, but this institution is handling your money. If their customer service is really poor, you don't want to give them your money. Plain and simple, right? And I would say trust and familiarity. I've heard of people going on that list and then choosing one. I'm like, well, what research did you do? Nothing. Why did you choose it? Because they have the highest rate. That's not the reason to choose them. You have to trust the institution, right? You wouldn't just go to like some guy on the street and hand them 10 grand and say, well, he was going to give me the highest rate, he said. So, I give it to him instead of going over to an institution I've heard of, which is kind of what you're doing in some respects. If you do research and feel comfortable with them, you trust them, you have some familiarity with them, that's a good thing. Gut feeling on this stuff is very important in my opinion. Okay, so let's say you do all of your homework, you look at the pros, you look at the cons, and you go, all right, I think this high yield savings account is for me. What should I do to maximize this? I always say to do some regular depositing into there. So basically you could take $50 a month and put it in there to just continue to grow the account. It's a great way to keep building so that your APY is building with you on the accounts. It's a great place to save to. Once you have your emergency fund, if you, let's say you're looking at your models that you're doing for investing and you don't want fixed income, this could be your fixed income bucket, and you could go, all stock and funds. I would say stock funds, on the investments. Should you do that? I don't know. It depends on your risk. It depends on your buckets. It depends on all that stuff. But it's the concept of it could be an equivalent to a fixed income portfolio if you wanted it to be. Now that could change, of course. Bonds are kind of not doing anything right now. Some of them are, but some of them aren't, right? But that could change so that bonds are doing spectacular. So obviously you want to change your strategy if if things change. But right now, some people just decide that they want to keep the cash and get the 4.3 on it and go a little bit more aggressive with their investments, and that works for their planning, right? That's not for everybody. That is my disclosure right there. You want to rate monitor. I mean, I hate to say it, but you want to be looking, not every month, but you want to be looking every 6 months and making sure that you're getting a competitive rate. That's important. And I would say avoiding withdrawals. Now, I just went through how it's liquid and you can take it out and you might as well just do a CD if you can't take it out. That's what people think. I would say that's why you need to have that buffer amount at the regular bank so that you're not always reaching for this for little things like to pay off a credit card. Like, I wouldn't do that. I think that you are not going to get necessarily the benefit of the account if you don't have a regular balance in there. If you're bringing it down to zero all the time, there's no point, right? You're not getting an interest rate anyhow. You're not getting a rate of return anyhow on it. So there's no point of that. But keep enough in a regular bank to do what you need to do. And then, yes, you can pull it out. It's accessible. It's, all that stuff. But at the same time, it is someplace to start building and saving towards. So you can do your emergency fund there and then keep part of your emergency fund at the bank. And that way, that's just for, tires or something that you couldn't pull from your regular bank account from, stuff like that. So I would say try to think of this as a medium-term savings account, not, short-term in and out paying bills from it. I wouldn't do that. Okay, so my recap is don't be lazy. Look into high yield savings account. I say that with a laugh because I've had people say, I'm just being lazy, that the fact that I'm not looking into it. Don't be lazy. Don't be like them. Look into it. There's really no excuse not to look into it and at least decide if this is the right thing for you. And really, honestly, this could be life-changing for you. It could help you really start to see how your money is working for you, which is so exciting because you can hand your money off to an investment manager or to a financial advisor like me and that kind of thing, and have your quarterly updates and everything looks like it's going the right direction. But you don't really see the day-to-day action. You don't really monitor. You shouldn't monitor all the time because that will drive you crazy. With the stock market fluctuations and stuff, it would drive you insane to monitor it all the time and stuff. But with your bank accounts, you can. And you're not going to open it up and go insane because the market dropped 10%. It wouldn't happen in a day, but you know what I'm saying. Well, I guess it could happen in a day. I shouldn't say that. It could happen in a day. The market could drop 10% in a day. It's not going to happen to your bank accounts if you have them in the right type of bank accounts with insurance and all that stuff. So, essentially it's a great way of getting to learn how to make your money make money. And there's a quote I'm going to end on, and this is by Marshall Silver, who I didn't know who he was, but he is a business consultant and motivational speaker. I have no idea who he is or if he's great or not, but I did like his quote. And his quote was, either make your money work for you or you will always have to work for your money. We don't want that. So next on the agenda is going to be what should we do for the second half of 2024? I cannot believe we're halfway through the year already. We are in summer. It is hot. We are doing barbecues. But what should you be looking at and doing for the rest of the year? Because there's stuff that needs to be taken care of, and we are going from summer to fall to the holiday season, which my husband says the holiday season kicks off on Labor Day pretty much, which it feels like that, because as soon as Labor Day happens, bang, everything seems to happen, like Halloween, and then it just goes downhill from there. So there are specific things you should look at to have everything ready for a fantastic 2025, and you should start them in 2024. So that is what we're going to talk about next time. Thank you so much for watching this. This is another long one, but if you stuck to the end, man, you are a trooper. I love it. And you must love talking about money as much as I do. And hopefully this was somewhat entertaining. You got some good information out of this. I always avoid educational because that just sounds boring. But hopefully you got some things to make you think. That's what I want, is for you to think in a different way about your money. So until next time, take it easy, stay cool out there in the summertime, and we shall see you on the next video.